The video highlights a discrepancy between official inflation rates and the perceived cost of living. Government reports indicate an inflation rate of approximately 3%. This contrast suggests that official inflation figures may not accurately reflect real-world price changes. The premise is that the actual cost of living is rising faster than official data suggests. Inflation significantly impacts the cost of essential goods and services. Grocery prices have increased by approximately 25% due to inflation. Gas prices have seen a substantial rise, increasing by about 40%. Housing costs have also been affected, with an increase of roughly 30%. Government statisticians use various techniques to refine CPI calculations. Hedonic adjustments are employed to account for changes in the quality of goods over time. These methods can potentially mask the true extent of inflation. A side-by-side comparison reveals discrepancies between official data and actual price increases. The implication is that official numbers are manipulated to downplay the true extent of inflation. Inflation erodes purchasing power over time. For example, $100 in 2020 may only have the buying power of $75 today due to inflation. This represents a tangible loss of wealth, as the real value of money decreases. Tracking purchasing power helps understand the true cost of goods and services over different periods. Savings accounts can lose value when inflation outpaces interest rates. Inflation reduces the purchasing power of money over time. If interest earned is less than the inflation rate, real savings decrease. This erosion diminishes the future value of hard-earned money. Bonds are underperforming due to real inflation rates. Stocks are exhibiting volatility and signs of overvaluation. These factors highlight the inadequacy of conventional investments in the current economic climate. Traditional financial advice may not be well suited for the current economic climate. A key challenge is the significant erosion of wealth due to inflation. Outdated strategies may fail to protect against inflationary pressures. Modern economic conditions require more adaptive and sophisticated approaches. Investors should seek advice that accounts for the impact of inflation on their assets. Gold has served as a store of wealth for 5,000 years. Gold is known for preserving value during periods of high inflation. Historical price charts demonstrate gold's performance during inflation spikes. Silver functions both as a monetary metal and an industrial commodity. This dual role contributes to silver's value as an inflation hedge. Similar to gold, the supply of silver cannot be artificially increased by governments. This inherent scarcity protects silver from devaluation during inflationary periods. A portfolio allocation of 5 to 10% in gold and silver is suggested as a hedge against inflation. Gold and silver are considered stores of value that can maintain purchasing power during inflationary periods. Allocating a portion of a portfolio to these precious metals can mitigate the erosion of wealth due to inflation. Dollar cost averaging is presented as an accessible method for investing in precious metals. Dollar cost averaging involves investing a fixed amount of money at regular intervals, regardless of the asset's price. This strategy helps to reduce the average cost per unit over time and minimize the impact of market volatility. Owning physical gold and silver is presented as a more secure investment strategy. Paper metals involve counterparty risk, which physical metals avoid. Direct ownership of physical metals provides tangible control and security. Physical metals offer a hedge against financial instability. The benefits of direct ownership are highlighted for investment safety. Proper storage is crucial for maintaining the value and security of physical gold and silver. Secure storage options range from home safes to bank deposit boxes. Home safes offer convenient access, but require careful consideration of security features. Bank deposit boxes provide enhanced security, but may have access limitations. Insurance coverage is essential to protect against theft, damage, or loss, regardless of the storage method. Regularly review and update security measures to adapt to evolving threats and maintain optimal protection. Guidance is provided on where to purchase gold and silver. Options include local dealers for in-person transactions. Online retailers offer another avenue for buying precious metals. Beginners are advised on what to buy initially. Silver rounds or bars are recommended as a starting point. When investing in precious metals, focus primarily on their metal content. Avoid numismatic coins, as their value is often tied to collectability rather than metal weight. Prioritize bullion or standard coins with lower premiums to maximize your investment's metal value. The call to action urges viewers to proactively shield themselves from inflation. The message advocates immediate action to secure financial stability. Even a modest investment is highlighted as a meaningful step. This step is towards safeguarding one's financial future against inflation's impact.